I'm AJ Trott.
And I'm Jeff Swiderski with AnnieMac Home Mortgage's Momentum Group, your trusted partner in the home buying process.
At AnnieMac, we can strengthen your offer with our innovative program, Cash to Keys, giving you a competitive edge by allowing you to make a cash offer on your new home.
Together, we've helped over 1,000 families move into their dream homes, and we'd love to do the same for you.
Give us a call today at 401-486-0853 to get started.
Hello, everybody, and welcome back to Keeping It Real Estate with Trott and Swiderski. Ladies and gentlemen, AJ Trott and Jeff Swiderski. Hey, guys, how's it going?
Good, how are you?
I'm good. What are we talking about today, guys?
Today, we're actually going to answer the question that we get probably more often than any other. What is my interest rate today? And truth be told, that's actually a loaded question. There's a lot that goes into that calculation, how we can offer an interest rate, how we arrive at that interest rate. And we're going to dive into some of that today for you guys.
And just, from a market perspective, what impacts interest rates as well. I think a lot of people always try and, plan and forecast and when should you refinance? And, so many times that is, of course, interest rate dependent. If you're trying to lower your interest rate, you want to know which direction interest rates are headed. And, to AJ's point, there's so much information out there, but it's such a loaded topic. And when you look at it just from that, forecast standpoint or where things are headed, it's always everybody's best guess. It's the exact same question is where is, the stock market going to be in 6 or 12 months? Everybody's guessing. You have no clue. It's not like anybody expected COVID to hit in whatever it was, March of 2019 and see interest rates plummet and see the stock market plummet. And then, how many people pulled money out of the stock market only to see it go on one of the most prolific runs that we've ever had in the last, 4 or 5 years. So it's just one of those things where we can all sit here and guess and talk about what does impact it. But at the end of the day, it is exactly that. It's forecasting, it's guesswork, it's, just looking at history. But I guess to shed some intelligent light on it, in terms of what does impact interest rates, one of the main things you can do is just look at inflation. If you actually pulled up a chart of inflation history and the US 30-year fixed rate mortgage history, they're almost in lockstep. There's a little bit of a lag. Inflation will go up first or come down first, and then interest rates will follow. But they work in literal lockstep. If you look through the 70s and 80s when inflation was running rampant, interest rates, it was nothing for them to change 4 or 5% over the course of a month or two, which is hard to believe. But you look at when inflation started to rear its ugly head again for the first time in 40 years in 2022, that's exactly what happened. Interest rates went from 3.5% in January to 8.5% in November.
Fun little run.
Yeah. Most people don't even realize that, though. You were talking about 5% in 10 months. That's hard to wrap your brain around. So inflation is a really important one to pay attention to. One thing I love to absolutely debunk, because it comes up a lot in conversation, is the Federal Reserve is going to lower rates.
They're going to cut rates today.
And everyone, hears that and they think, oh, they're cutting rates. Mortgage rates are going to go down. The Federal Reserve has cut rates a couple of times in the last, call it 6 months. And since they started, 4 months, since they started cutting rates, mortgage rates went up 1%. So there is, I don't want to say no correlation, because it can certainly influence long-term or mortgage rates that way. But generally speaking, there's no direct tie. What you're looking at right now is, whether you take political bias out of it or anything out of it, the economy is really strong. In December, people spent more money on Christmas than they ever have before. You look at unemployment numbers and wage growth numbers, all of the things that tell you businesses are doing well, employees are doing well, and then all of those result in government spending money, businesses spending money, you guys spending money, myself spending money. All of those things are happening right now, and that's a great sign. But that does also lead to either a more steady interest rate environment, which rates are quote high right now, not historically, but that's everyone's perception. Rates are high, so you should kind of expect to see that stay fairly consistent until spending decreases. Think government spending really, and the economy starts to slow. That was a really long-winded answer. Somebody say something.
No, I like long-winded answers because I know nothing about these topics. So that is where I am just a sponge for you guys every time you come in, and I love it. And this is like one of my favorite shows to do because it's so informational, and I know nothing. So I'm just sitting over here like the dumbest person in the room, and I love being the dumbest person in the room. I genuinely mean that because it's a great opportunity to learn. So
I'm going to cut you off for a half a second. Have you ever watched the School of Hard Knocks videos on like Instagram or anything?
No.
He's just this young kid from Texas. I think from Texas. You should pull him up. He's great to watch. But he built his following to, I forget how many millions of people now. He's done an unbelievable job with the channel, but I watch him all the time. And he interviews now, some very famous people. He's interviewed Shaq recently and people like that. But he literally just walks down the street, and if he sees someone driving a Ferrari or, that just looks luxurious, he'll just walk up to them and start asking them questions and engaging them in conversation.
That's great.
But it's always around, how they got there. And he just interviewed this billionaire, and he asked the person the question, how did you get here? And, something along those lines. And he looked at him and said, if you are the sixth friend in a group and you're hanging out with five people that all they want to do is drink and hang out, you're going to be the sixth person to drink and hang out. Right. If you hang out with five billionaires, you're going to be the sixth billionaire. And, of course, it's not always true, but, his point is surround yourself with people that know that know more about a topic that you want to know about than you already do. So that's cool.
You are the average of the five people that you spend the most time with.
Yeah.
Right.
So, all right. I'm calling all of my friends after this and canceling on them.
Sorry, guys.
No drinking tonight.
So, how do interest rates get determined, though? Like, just on a very basic level, because I'm 5. Explain it like I'm 5.
Yeah,
I'm 5.
So there's several factors, right? So it's not just as simple as the market's this today, we're going to plug and play, this is your rate, right? Interest rates can be influenced by which program you're looking at. There's variance between, an FHA loan, for example, and a conventional loan. Same profile, 2 different interest rates. Other things like how much your down payment is, right? The more money you put down, generally, the better the interest rate's going to be. Less risk on the lender. It's a stronger profile, lower interest rate. Credit score. Most people know that credit score is a big part of that calculation, right? How can I improve my credit? We touched upon that in an earlier session. Just ways that we could go about helping you get to that next tier, because it does impact your interest rate. Higher credit score, typically better interest rate.
So what is the difference? I know that you've explained this to me before. What is the difference between a fixed and a variable interest rate?
Yeah, generally speaking, you are taking on more risk by having an adjustable rate mortgage. Right. So, as a generalization over time, you're usually looking at a slightly lower interest rate on an adjustable rate because you are taking on some of that risk.
Right.
And usually your rate is fixed for a certain number of years at the start of a regular 30-year mortgage.
Why would someone choose one over the other?
Yeah, it's taking advantage of the lower introductory rate, right?
Yeah.
It's, if in normal years, an adjustable rate mortgage will show you a lower interest rate than your standard 30-year fixed. Let's say, for example, when I bought my condo back in 2014, we did it on a 5/1 ARM for the reason of taking that lower interest rate, knowing that this is just our starter home. This interest rate is going to be fixed for the first 5 years, but I'm 0.5% lower than what the market is on a 30-year fixed.
Right.
So I'm going to spend less on my interest over the 2 years that I own the condo. Ultimately sold the condo at a profit, and before my interest rate even got to a point where it would adjust. And so I saved myself money by leveraging that adjustable rate in the right environment.
See, that makes a ton of sense to me, the way that you just explained that.
Yeah.
Okay. And then if you're planning on staying for a long time,
Right.
if this is your forever home, maybe you want to lock it in because
Yeah.
you don't know what the future is going to hold.
Longer term for
Yeah.
sure, right? Protect yourself against that. I mean, some people still do leverage and play the adjustable game, and they
Yeah.
just go from adjustable rate to adjustable rate, depending on your risk
'Cause you
tolerance
could-
level.
Because you can
You can,
always
in theory-
refinance and yeah.
Exactly.
Okay.
Exactly. But in this environment in particular, adjustable rates right now aren't all that appealing just
Yeah.
because we're not seeing that traditional separation
Right.
between a 30-year fixed and what that adjustable rate is. If I can give you a 7.25 on a 30-year fixed loan, and I can give you a 7.25 on an adjustable rate, which one are you going to take?
Yeah.
Right. It doesn't make sense in that environment. And that's just because, we're hoping that interest rates come down at some point. Forecast is saying that there will be opportunities to refinance, whether that's 6 months, 12 months from now, we're not sure, but investors know that you're going to refinance that loan. And so there's not as much of an appeal to having that adjustable interest rate on the books, knowing that you're just going to go ahead and flip that loan anyway. And so that's why we're not seeing that standard separation, and it doesn't make as much sense today.
There are a lot more houses on the market right now than there were 2 years ago. Not that there's an extraordinarily high amount right now, but it was nothing. It was almost nothing 2 years ago, right? Does the availability of homes affect the interest rate going up or down?
Directly, no. There's really no actual correlation there. I guess AJ was just kind of leading into, investors, if you will, talking about adjustable rate mortgages and demand for those mortgages. That's really what sets the market for anything. If you're looking at, we'll just pick a company, Amazon stock. It's really, obviously based on their earnings and based on their net profit and all of those things. But it's also simply based on, is there money in the system, and is somebody willing to pay more money for that stock the next day? That's what drives a stock price. Interest rates are really going to work the exact same way. And that's usually the way I try to explain it to anyone. Interest rates are going to move all day, every day, just like the stock market does. And the reason for that is exactly the same. If somebody's willing to pay more for that bond, then that's actually going to bring the interest rate down. If there's more demand for bonds, that results in lower interest rates. If there's less demand for bonds, that's going to lead to higher rates. So what you're seeing right now is exactly that. The markets are all very unsure of where anything is headed, for that matter. There's a ton of government debt in the system right now, and that's not just a US problem. That's Europe, that's China, that's this is a kind of global phenomenon of there's a ton of debt, and everyone's just sitting there looking at it saying, is this sustainable? And, I don't think we're at that inflection point right now where financial systems are going to collapse around the world. But that is a legitimate fear of, is there going to be enough money in the system to sustain those levels moving forward as well? And that's why you haven't seen a lot of, decline in longer term interest rates. And that's exactly where mortgages come in.
Wow. Okay, so this is a question for me as a potential first-time home buyer. How do interest rates differ, or do they differ for first-time home buyers versus somebody who's seasoned at that? Or does it make a difference at all? Is that something
That's a
that
great
goes
question.
into effect?
Yeah, it can. And that goes back to just the difference between certain programs. A lot of the first-time buyer programs that are available these days are targeting, a specific level of income. You tend to see a discount in the interest rate compared to what you would see for folks that are outside of that threshold. So we definitely encourage our first-time buyers to take advantage of those programs where they can. And we're very good at trying to fit you inside that box in ways that we can go about doing that. And so, yeah, absolutely. First-time buyers do get a little bit of a break there.
And likewise, when you look at down payment assistance programs, whether that's Rhode Island Housing, Connecticut Housing, Mass Housing, a lot of those programs, to AJ's point, still fit into an income maximum, if you will,
Right.
or an income threshold. But if you fit into that bucket, those kind of government-backed loans actually do come at a lower interest rate as well, because it's quote subsidized.
Yeah.
So yeah, there's a lot of opportunities to get a lower rate as a first-time buyer.
And I'm actually not asking this question for myself, although when it helps me. We've talked a lot about the way that the past several years and where we are has affected the real estate market. One of the things is that, we've had the great resignation and so many people becoming self-employed, whether that be going into the gig economy, starting their own small business, whatever it may be. There are an influx of more self-employed people than there ever have been in this country. So what should self-employed borrowers know about getting the best interest rate?
Believe it or not, you don't actually, have anything that impacts rate just for being self-employed.
Right. There's no self-employed penalty to your interest rate.
I guess where it does come into play more is if you are in that situation where, you're not reporting as much taxable income or, something like that, but you are utilizing a bank statement program. Those interest rates can be slightly higher than you would see in the traditional market. So I guess that's one way where a self-employed person is using, kind of non-traditional financing.
Outside of the box type of program, a little bit more risk to the lender. And so thus the interest rate's higher. But generally speaking, I mean, the challenges between, for going self-employed is simply just the amount of time that you've had the business, right? And then how you show your income. That's, qualifying for the loan itself is the bigger challenge.
Yeah. That's good to know. Again, not for me.
Not for the self-employed.
Not
guy.
for the self-employed. No.
Across the desk. Yeah.
Yeah, absolutely not. Absolutely not. And are there special programs and strategies, government-backed loans, FHA, VA loans that offer lower rates? I mean, all of these questions, by the way, are why people should just call you guys because everybody has their own specific needs, and right. So like you just said, AJ, you're trying to fit people into boxes to get them the best rate, to get them the best opportunity. And you don't know if you specifically qualify for an FHA loan or a VA loan or, any other of these loan programs that I've never even heard of. And that's why you guys are the professionals, because you do this every single day and you help, hundreds of people every year get into these things. What are the specific programs that people don't know about, or that and you don't have to go into great specifics with this, but what are some of the things that people don't know about that they might be surprised at?
Sure. Well, Jeff just touched on one of those is for the self-employed, right? Is their bank statement programs. People think, well, my CPA is really good. I write off a lot of my income. I can't show a lot on paper. I can't get a loan.
Yeah.
And that's not necessarily the case. We've got programs that will allow you to qualify with either 12 or 24 months of either personal or business bank statements. It's an average of your deposits. And as you mentioned, the interest rates may be a little bit higher than what you'd see as something that's more in the box. We're using tax returns, the whole 9 yards, but there is a solution for helping you buy a home. And so that's a good one to kind of bring up. As far as other programs, what comes to mind?
Yeah, I mean, investor specific,
Sure.
You can actually buy, a property that you intend to rent strictly based on the rent of that property. If it doesn't even have to, but if the rent covers the mortgage payment, that's kind of an ideal scenario. It's called a debt service coverage ratio loan, DSCR, meaning that the property is self-sufficient. It doesn't need your income.
Right.
So you actually don't even need to provide income documentation for that type of loan.
No tax returns, no W-2s. We're
Yeah,
not asking about any of that.
we
The property
don't-
cash flows, you're in.
Yeah, we don't care about the individual. It's just a matter of the property itself.
All right, I'll buy one of those.
Sold.
Is it a good time? I guess it's always a good time, right? So it's kind of like planting a tree. What's the best time to plant a tree 20 years ago? Second best time today.
Right.
I was going to say, is it a good time to purchase investment property? But I guess it's always a good time to buy real estate if you have the ability to.
Just shy of 20% of all transactions nationally are still investors.
Yeah.
And that number barely ebbs and flows over time. There's just always opportunity in real estate. I was actually reading an article about Tony Hawk of all people, and he was talking about how the best decision he ever made was the first house he bought.
Yeah.
Because then he bought his forever dream home and ended up almost defaulting on it because he couldn't afford it, and then he moved back into that house to have his first kid. And,
Wow.
It's just the ebbs and flows of time. But to your point, real estate is hard to argue against in terms of investment quality.
Yeah. I actually know somebody who always dreamed about buying their own home, and they ended up purchasing a multifamily because of that.
Genius.
Because they had income, they had income issues, they had credit issues, etc. They bought a multifamily in New London, and
Love it.
and then was able to, after a year of owning that home and living at that home as well, purchasing a second home in, closer to Westerly where they wanted to live, because they had the credit, they had the history, they had the
Absolutely.
relationship with all of that stuff.
Yeah.
And I don't know if they own both still, but yeah, they were able to buy an investment property, a multifamily that they could live in, as well as rent out, and the rent would cover the mortgage. And then they were able to parlay that into their dream home.
As we call it, house hacking, right? It's one of my biggest regrets is that I didn't buy a multifamily for my first home. Right? It's a beautiful thing.
Yeah. I gotta do that. I gotta buy a multifamily.
There you go.
You guys have inspired me.
It's such an easy way to set yourself up.
Easy way to set yourself up.
Cash flow.
Springboard off of that into your next place.
Are there any big mistakes that people make a lot when they try to shop around for interest rates?
Well, that's a good segue actually, because one of the biggest things that people focus on is that interest rate, right? What's my interest rate? I don't care about anything else. Just tell me what the interest rate is. But it's very, very important as somebody who's shopping for the best mortgage opportunity that you're looking at not just the interest rate, but the relationship between that interest rate and what the cost of that loan is. Ooh. Right? A lot of lenders, unfortunately, there are still some bad eggs in our industry. We'll show you that nice low interest rate. I'm 1% lower than this other guy. This is such a better loan for you. You stop talking to Jeff and I, and all of a sudden you realize that you're paying another $4,000, $5,000, $6,000 in cost on that loan to get that lower interest rate that we could have given you for less than that.
Right.
So it is important to pay attention to all of the variables and not just fixate on that interest rate.
Wow, that's a great point. What else haven't I asked about that we should be covering?
What are the Powerball lottery numbers?
I know, right?
Yeah, back to forecasting.
There we go.
It must be hard, because I'm sure that everybody asks you about the interest rates all the time, and there is no magic ball here that will tell you precisely what the market is going to do, right. Or what the government is going to do. But the best thing is just to call a mortgage lender and to see what you can afford and what is out there and what programs you can fit into, right? Like I
think the idea is to have yourself in the position, right?
Yeah.
So you want to have your hand over the button to be able to push and lock that in when it makes the most sense, right? Jeff and I have access to some pretty good tools that try to track what the market's doing. They give us the insider scoop on, information that's coming out that may drive interest rates one way or the other. We do our best to forecast what that might look like, whether it's for the better or for the worse. But if you have your application in, you got your docs together, you know what you want to do, we know when the time is right to push that button and say, hey, this is going to get worse tomorrow. Let's go ahead and protect you today.
Yeah.
Or, you know what, we think it's going to get better. If it was me, I'd let it ride, but here's your opportunity. It's up to you. And that way you at least have yourself in a position to take advantage of what things are going to do.
Yeah, and to kind of piggyback on that, this is why I always get back to the planning aspect, because to me, if it's a funny line, but if you ask the question, am I ready to buy a house? The answer is no, because, there's legwork that goes in on the front end. Have you looked at your budget? Do you know what's going to be comfortable? Right. I say constantly, you don't want to be trapped inside the four walls. You know your life better than me. I don't know how often you like to go out to eat. I don't know all of the things you like to spend your money on. It's impossible to know someone that intimately. But if you've actually looked through your finances, set a budget, and this is the number, and the dream house that you want lines up at that number, at that rate, on that day, and everything's right there, why would you not lock that in? Why would you risk that getting away from you? A lot of times people fixate on interest rate, and the majority of the time, 0.1% of rate is all that you're ever looking at movement wise, one way or the other. And you're talking about $25 or $30 a month. If $25 or $30 a month is making or breaking your budget on a house, there's probably a deeper conversation there.
Right.
Wow. Yeah, that's a great point. I have that conversation, not about mortgages or rent, but I have that conversation all the time when talking about big purchases. And I'm like, if $20 at the end of this is the problem, I shouldn't be buying
Should
this
be
thing.
doing it. That's
Amen.
a great way to look at it.
And if it's not a problem, get the extra thing that we need. You know what I mean?
Mhm.
So, you guys are fantastic. All of your contact information is in the description of this episode, so you guys don't need to go through it. But other than calling you, if you have any questions, do you have anything else that you want to let people know about before we go? And you can just say no. That's fine.
Cash to keys.
Always.
Always cash to keys.
Yeah.
If you're having a hard time in this market with a limited inventory and you're finding that you're making offer after offer on your house and you're getting rejected and you're not even being entertained, talk to us about how we can make you a cash offer. It's the most powerful tool that we have out there right now.
Yeah, leverage us to get in the house that you actually want to buy.
Right.
You know, Ben said it earlier. There's so much more inventory now, and statistically, there is. You know, if you look at it as a percentage increase, it's crazy. But it's because we went from 600 houses for sale to like whatever it is now, 800, 900. I don't know the exact number today,
Still
but
not
it's pretty low. In a balanced market in Rhode Island, that number is somewhere around 3,500 for context. So
Wow.
right now it's competitive, and there are that many investors in the market, and there's that much
Right.
other cash in the market. So the answer is, you know, putting your best financial foot forward, having a cash backed offer with cash to keys, and winning that property that you want.
I love it. You guys are the best. AJ Trott, Jeff Swiderski, keeping it real estate. I love it. Thanks, guys, so much for being here. We'll see you next week.
Thank you,
Thank you, Ben.
Hi, I'm AJ Trott.
And I'm Jeff Swiderski with AnyMac Home Mortgages Momentum Group, your trusted partner in the home buying process.
At AnyMac, we can strengthen your offer with our innovative program, Cash to Keys, giving you a competitive edge by allowing you to make a cash offer on your new home.
Together, we've helped over 1,000 families move into their dream homes, and we'd love to do the same for you.
Give us a call today at 401-486-0853 to get started.
Touchdown, West Philly!
A chance for the Chargers, and they score!
In the front, Fuzzy again!